Does your family ever get exasperated with you for stockpiling such things as paper towels, bottled water, or toilet tissue? Well, they certainly can't object to you stockpiling money. Silver, the only money recognized by the U.S. Constitution, and your first 10-ounce bar of pure silver can be had at spot price with no premium by going to sdbullion.com/rp. And when you buy it that way, you'll be supporting Reluctant Preppers as well by going to sdbullion.com/rp. Thanks.
This is a quick update to thank you for building our number of patrons to 70 and growing on patreon.com/reluctantpreppers.
Soon, when we reach 100 active patrons, we're going to start sending out a 1-ounce U.S. Silver Eagle each and every month to one active subscriber, so you don't want to miss out on that.
Please help us grow by subscribing today at patreon.com/reluctantpreppers.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We have a returning guest tonight. Daniel Ameduri is co-founder of FutureMoneyTrends.com. He's been with us a couple of times in the past, talking and weighing in on, in fact, what the future holds for major trends in our economy. Daniel, thank you for joining us once again on Reluctant Preppers.
Hey, thanks for having me on the show. I remember the first show I did was in Las Vegas in person. It's been a long time, huh?
It sure has. And yeah, this one weren't able to pull off in person, but actually we keep talking about doing different road trips. We just came back from a travels to Bermuda, where we did a write-up on the various emergency preparedness that we saw and talked to the residents there about, which is quite interesting for us, because that was, to me, as a growing up young man, Bermuda was synonymous with disaster waiting to happen. So it was quite interesting to see how well they literally weather the storm. But we wanted to check in with you. If we could, on a couple topics, the first of which would be this incredibly long and protracted bull market that we've been in. Some say unnaturally long. The S&P 500, I think according to some of your research, was saying has never enjoyed 10 years in a row of positive gains, like 9 being the previous record. So if you could weigh in for us, because this is one of the things that a lot of our viewers are concerned about, is not wanting to keep drinking the Kool-Aid at the party too late. If we're on the surface of a bubble that's likely to pop, they don't want to be the last ones, at the punchline there. So could you tell us what your research is, and those that you've talked with is telling you about the future of the overall market?
Yeah, no, we actually just did a very in-depth analysis on this at futuremoneytrends.com/top report, if anybody wants to check that out. And what we found is that we are way beyond what we have seen in the past and historically, and it's because of all the central bank buying. We literally have central banks disclosing purchases of shares. You have cheap money in the system to the point where companies are actually borrowing money to buy their own stock. And Of course, this works out really well for the corporate insiders and the wealthiest funders or owners of the companies. So we're definitely on an unprecedented situation in our own U.S. stock market. Now, with that said, I think the economy is very fragile in the sense that we do see some real positive signs for the U.S. economy since the tax cuts and the rollback of regulations.
Yeah.
However, there are some big things that you and I have talked about in previous interviews, like the U.S. Treasury market, where we're very vulnerable. And I think people talk about a trade war. And I liked how Trump actually put it. He said, "There's no trade war. That war was lost 15 years ago," and it's true.
Yeah.
We've been in decline for quite some time. So, at the U.S. stock market, as far as overextending, here's what I've been telling everybody at Future Money Trends. We want to own some stocks, because if you look at other economies that have had bouts of hyperinflation or currency crisis, the fact of the matter is the stocks are backed by real businesses. Coca-Cola doesn't go to zero because the dollar goes to zero. McDonald's doesn't go to zero because the dollar goes zero. Could their business be impacted? Absolutely. So I like businesses with some international exposure. I like world dominating businesses nobody can deny. I don't buy too many individual stocks, but the ones I do own are, usually need companies. I do like just to throw out names, these aren't suggestions, but like Budweiser, like Kimberly-Clark, which is a toilet paper company. I like Disney because I don't think Disney's going away. So I mean, I really approach it with that mindset right now. Like I'm not expecting these stocks to double again, but I also don't want to bet against them because in an inflationary environment, in an environment where the currency is in crisis or even in collapse, I think you could see the Dow potentially go to 50,000, 100,000, 300,000. That doesn't mean you're going to get rich overnight. That's just because the currency is going down the toilet. So, but I think we do want to diversify as much as we can, and not in the stock market I'm talking about, but diversify in many assets, gold and silver, maybe some physical real estate, maybe some stocks like the biggest companies, the safe companies, the ones that'll be around when your grandkids are doing business. So a good diversification, but certainly just throwing money in the stock market right now, extremely speculative. It's way overstretched right now.
Could you talk to us a little bit, as long as you're talking about people looking forward to future generations, they want to know, are the dreams and hopes and promises that people could really get ahead that previous generations, our grandparents, our parents' generations, and maybe when we were young, thought we could expect? We could grow up, if you worked hard, saved up, did prudent investments, you could actually get to financial independence and become, in some cases, the millionaire next door, even on an average salary of, say, less than 50 grand or something. Is that still within reach, or have the rules of the game been so perverted, so distorted? Is the playing field so tilted that dream is no longer really attainable for the average person?
I think it's a difficult question because the perception that was a reality was more of an experiment, so and now we're coming to the end of that experiment. When Social Security first started, for example, let's talk about government retirement. It worked out really well for the first generation that was on it, especially the first person who put like $28 into the system and got, I think she got like $80,000 out of it. It's a pretty good return on her investment, so it worked out. And it seemed to work out for the baby boomers too. But now the more people that are enrolling, the more people that age and are wanting to get entitled to these things, which they put money in for it. No doubt. Right. I'm not questioning that they put money into it.
That's right.
But the system itself, it started from, the wrong place. It started with bad math. And, people think that the retirement accounts and retirement itself has been around for, but I mean, even 401ks have only been around since they were passed in the late 70s and enacted in the early 80s. So can someone save and invest and over the long haul experience that same thing the baby boomers did? I don't think so, because, the baby boomers had a lot of upside. And remember, when you first introduce government programs, of course, there's a lot of upside in the beginning. So take housing, for example. When you introduce the 30-year loan, that's a game changer, and that can have effects for the 50 years. When you first introduce government-backed entities to do subprime mortgages, it works out really well for all those people who are selling real estate into that wave of subprime buyers, but then not so well for people in 2008. So I think repeating the exact same lifestyle your parents did or baby boomers did, if you're a millennial listening to this, I don't think that's the way to go. And I think you have to embrace the freelance economy, much like some young people in our lives that we know of. Who, you can start a YouTube channel, you can start a podcast, you can start a website for almost nothing, sometimes literally nothing. I know I started the Vision Victory channel back in 2008 with a $20 Logitech webcam and did 242 unedited videos talking in front of a closet. So there are a lot of ways to make money now. So I don't want to say the opportunity is gone, because I think the opportunity could be even better with the internet. You can start a business for $10 at GoDaddy. But you're not going to duplicate with the baby boomers, that Dow Jones experience, treasury yields. I mean, look, the baby boomers, when they first started to reach, where they're starting to get married in the 80s and start to have kids, they saw interest rates go from 18% all the way to, 4 or 5% by the middle of 2000. That's not going to repeat. The baby boomers, the largest generation that dwarfed the generation before and after, when they started hitting their peak spending habits, and Terry Dent's talked about this in the 90s, that caused housing prices and everything to soar and boom. And then add in the internet, a communications revolution. Those type of things only happen every 100 years. So I think it's much different, but I don't think that you don't have to be all doom and gloom if you're younger. You can embrace the freelance economy for what it is, and you can work on your own schedule as somebody who has your own business, your own clients.
So all of these are ways that are, you're saying that there's still the opportunity to make it in a big way, but just not following the old paths. There's new paths you need to forge for yourself.
Sure. Yeah. At futuremoneytrends.com, we call it the 1980s portfolio. So we want to do personal finance for the new economy. And most people, when you listen to a show like Dave Ramsey, somebody who I highly respect,
Yeah.
he's his best. He has the best intentions for people. But his investment advice, in my opinion, is horrible because he's giving them investment advice that was great for somebody in the 1980s, but not so great for somebody buying the stock market at 25,000, expecting a 12% annualized return, which
Yep.
I don't think that ever happened anyway.
So let's broaden that question out, kind of circling back to where we started with this, and that is, do you feel that the whole wealth building scenario is rigged against people, and if so, how?
I don't think it's rigged against people. I think it's rigged for some people.
Okay.
Which is an interesting way to put it, because I'll tell you, as I made more money and my net worth increased, going into a bank or talking to an insurance agent, there are vehicles out there that I was unaware of, and I would still be unaware of if I hadn't reached a certain net worth. And I'll give you an example. The banks, because of my liquidity and because of my assets, will actually loan me money, put it in an interest-bearing account for about 5%. The interest I'm paying the bank is about 2.5%. So they actually loan me money so that I'll make more money from their loan, but they also make money because the loan would be secured against my liquid net worth, which basically, so that gives them, they have no risk.
Right.
But I have no risk. It's a very interesting thing where they advance you a loan to purchase cash value life insurance. I don't want to go down that tunnel or a hole because it can be complicating, but that type of thing would be what I would say is rigged towards the wealthy. Now, same thing with this accredited investor thing. I've been investing in these accredited investor things since I was 18. I was lying about being a millionaire when I was 18 years old, but it was your ticket to the party. And I think the crowdfunding is breaking that down a little bit, where now people can crowdfund a mortgage. You can have $1,000 in a $5 million commercial mortgage. You can have a participation in that note. The same thing bankers have been doing for thousands of years. Now you have access to that. So that's a positive thing. But certainly when it comes to the stock market specifically, people need to understand it is 100% rigged for the wealthy. It's rigged and not even the normal wealthy. We're talking about the 100 millionaires and billionaires and major financial institutions that are surrounded and guarded by the Federal Reserve and central banking system. Absolutely, it is rigged by them. If anybody's ever seen The Wolf of Wall Street, that conversation Leonardo DiCaprio has with
I think it was Matthew McConaughey you were talking about in the
Matthew McConaughey, yes.
Yeah.
When he talks about they don't care if the stock market goes up, down, sideways, they can't figure out, it's all fugazi, because ultimately they want to collect the fee, they want to collect the commission. And if you look at all these investment vehicles out of Wall Street, the entire thing is built on commissions and fees. And even the creation of the public companies where venture capitalists and Goldman Sachs are creating wealth out of nothing. If you took a private business, for example, and wanted to sell it, you might be able to sell it for, let's say, 1 time or 2 times, 3 times earnings, maybe 5 times earnings, 10 times earnings if it's a tech company. In the stock market, you can trade for 200 times earnings, like Amazon, where Jeff Bezos has the supposed wealth of $150 billion. That's ridiculous. That's absurd. He could not sell Amazon in the private industry, the private world for that. But with public companies, you can create money out of thin air. And who makes money? Who makes the billions and the millions? It's the insiders and these institutions putting these deals together. Meanwhile, the common guy, the average guy, is supposed to get excited about hopefully one day he can get a 7 to 12% annualized return, when reality is the real money is being made in the creation of the public companies and the creation of these retirement vehicles, where Wall Street has billions of dollars flooding in on the 1st and the 15th when the average guy gets his paycheck, right into the 401k. Hey, look, guys, every time you're buying stock, there's a seller on the other side of that trade. Who do you think the sellers are?
Hey, yeah, there's a video that echoed what you've been saying just now. Well, there's a whole bunch of them, but if people Google Michael Lewis, nobody understands the stock market on Bloomberg, they'll get it's very eye-opening, and he basically he makes a nice clear analogy of a rigged casino where you have these ace card players that are set up with special rules by the casino owners, and then the rubes, the rich tourists are let in, and we're the rich tourists, right? Except we're not so rich maybe, but anyway,
so true.
That you need to learn how so given that, what are some guidelines that you offer to people to how to take care of themselves if that's the environment, if that's the setup? So some people have decided, forget, I'm just completely leaving the casino. I want nothing to do with it. This thing is toxic. It's going to blow one day, and I don't want to be in there when it blows. So they pull their assets out. They put it only into, like, say, productive farmland, storable food and water, cold metal, precious metals, that sort of thing. Are there additional things that you would say people should also consider in addition to those actions to protect themselves?
Absolutely. First of all, everything you mentioned, I think they should do. But as far as exiting the casino, I think you should consider that it is a rigged system. And why bet against the people rigging it? Why bet against the Federal Reserve? Now, I know people are going to hate me for saying this, but look, I bet against the Federal Reserve and lost. I accurately forecasted the 2008 crisis and saw my silver go from $21 to $8 and saw my gold go from $1,000 to $700. I've bet against the Fed. I've bet against the people who were rigging the system, and I lost. And what I learned was to continue to do sustainable things and own physical assets and own cash flowing real estate and partner with people on certain micro cap companies that I think are going to build real billion-dollar companies. But at the same point in time, don't completely write off the stock market. I think a low index fund on the S&P 500 isn't a bad idea because, let's be real, they're going to keep pumping the S&P 500 up. The entire pension system is dependent on the stock market going up. So why completely bet against it? Why not diversify and have a little bit of it? And again, just consider this: when the S&P 500 started to today, only 89 companies of the original 500 are there. So remember, it's also biased on the upside in any way. It's biased because they're every June, they're getting rid of all the weak companies and they're replacing them with stronger companies or growth companies.
Right.
So it's highly biased to the upside, but then throw in the Federal Reserve and all these entities and power players that need it to go up. Literally, like the pension system will implode if they don't get the Dow to 30,000. If they don't get the Dow to 40 and 50,000, it's going to implode. So look, I own some gold and silver because maybe the pension system and maybe the sovereign debt will implode. But in the meantime, I also don't want to completely bet against these guys because I know they're ruthless killers. They're like mafia types. And so why not own a little bit of the S&P 500? Worst case scenario, I own a little bit of Coke and McDonald's and Disney and all these. These are great companies. So I also don't want to discount the people behind these companies. There are thousands of people behind each one of these companies, and there are also relentless entrepreneurs at the top that are running them. Many of them are not crooked. It's not a conspiracy that millions of people are pitted up against the rest of us. I think the entities out there are Trump, number one's pulled them out into nakedness to where we actually know who they are. We can see it with our own eyes. But I don't think every entrepreneur or every CEO out there in a Fortune 500 company is inherently bad or wants to screw the middle class. So, outside of stocks and gold and silver and real estate, I love fintech as well. That's kind of a new thing that's happened over the past few years where there's crowdfunding into mortgages. There's crowdfunding into other lending type businesses or even equity positions in commercial properties. I talked to a friend the other day on he had invested in Realty Mogul and some oil tankers. I mean, these are things that were only available to Goldman Sachs and the world's richest. Now they're available to everybody, and you can just chip in $1,000. So I think a good, healthy diversification is also very smart.
Some of what you say reminds me, it echoes some of the stuff we hear from like Gregory Mannarino, who's they call him the Robin Hood of Wall Street, because he talks about not betting against what the big guys are doing, but just watch what they're doing and take advantage of that, and then pull some off the table, and then go stick it in your hard assets and that kind of thing, and then go back and do it again. So while you're benefiting from the action that's happening in the casino, you're not putting all your eggs in that basket, so that you can continue to build a fortress outside that. And I think you've talked about that with us before, about layering your financial fortress as well.
What you just said, though, even the casino talks like that. So on Wall Street, the saying is, make money on Wall Street and bury it on Main Street.
Ah, okay. Well,
get it the hell out of there.
Now, you and your futuremoneytrends.com, you've been covering, like, for example, cryptos from when they were, like, Bitcoin was $13, and so you've gotten on the you've looked at a lot of things from the future-looking aspect. And could you give us just a quick glimpse on where you see cryptocurrencies going? They've certainly had a big sea change over the last 6 months here, but then also, is there any other asset classes that you think are going to be that kind of productive in the way that cryptocurrencies have been for the past several years?
Yeah, so that's I'll answer the blockchain part. I think that absolutely is the future, and right now we're making big investments into who's going to implement that. So I know you've interviewed Frank Holmes of Hive Blockchain, and we've also been big supporters of Global Live, which is Anthony Lacavera's company.
Yep.
He's the real deal. But these are the companies that are going to implement. So everybody says blockchain's revolutionary, blockchain's going to change everything. But where are the implementers? And these are very serious business people, people who built billion-dollar companies. And now they're looking to implement the blockchain and make business-to-business transactions easier, peer-to-peer transactions with more transparency using that blockchain. And in Live's case, they're using AI. Anyone's interested, we just did a special report on that one, futuremoneytrends.com/live. And you can learn about that. But with the cryptocurrencies themselves, I've always been a big advocate of Bitcoin, Litecoin. I do like Ethereum because of its utility, but I have shied away from ICOs, and I took a ton of heat for that in 2017 because everybody was like, I want ICOs. I don't want to hear about Bitcoin or these blockchain stocks. And the one I did recommend, I pretty much got burned on. And so, I'm glad I avoided most of them. If I should have just avoided all of them, I kind of caved to the pressure of subscribers just emailing me every day asking for an ICO. But look, most of these ICOs, it all starts with the people. It's like with any investment, you have to focus on very credible people. I happen to, know some of the public market, the power players, whether it comes to raising capital or building businesses. So that's who I tend to attach my money to. That's why I've chosen to look at Hive and Live. I didn't go out of my way to make them rhyme. It just happened. But, the other trend that we talked about in the past that I think could be bigger than blockchain in the sense that I believe it's safer and it's inevitable, structurally inevitable. And that's the cannabis space. And, again, we recently just launched futuremoneytrends.com/pure. It's a new company in Canada that just went public. The reason we focused on Canada is because your barriers have all been removed. It's no longer just legal for medical use. It's legal for recreational use. It's official on October 17th, but for all intents and purposes, it's done. Nobody's enforcing the old laws because it is officially legal. So we want to be big investors into Canada, specifically in the cannabis space, because that is going to be, they have first mover advantage, many of these companies. So you think about the companies that will be dominators in Canada, they will ultimately come to the United States and they will have big brands and a lot of money behind them to come and be big players in the U.S. market. So, we do invest in some companies in California as well, because again, it's got a big population. It's got a big advantage. But until that federal government in the United States removes that ban, which may happen, Trump's been open to it. I think we need to really keep most of our cannabis investment should be focused on, cannabis investment should be focused in Canada.
Could you talk to us a little bit about a demographic shift that's happening as well? You mentioned inevitability of this trend that you see in this particular industry, but can you talk to us about another inevitability, and that's the demographic shift that we're seeing in our country from the baby boomer generation to the millennial generation, and in what ways is our economy, our culture, our society evolving, if you want to use that term, to that you see continuing, and what do people need to be aware of, changes that are coming from that regards?
Well, I think earlier in this conversation, we talked a little bit about how the old style of the baby boomer economy, where you get out of college debt free, work, and then retire and be merry. That is a demographic change that we were seeing with the millennials. They're changing everything, from when they have kids to if they have kids, how many kids, when they get married. Everything's being pushed back with the millennials. Part of it is this overhang they have of college debt. The government got involved in college loans, and now we've got people who, of course, are deferring their payments while they're in school. And the universities, of course, they're not stupid. If you've got a consumer that doesn't know the cost of their behavior, and you've got big government behind it writing all the checks, who wouldn't raise the prices literally faster than anything outside of healthcare, which the government's also heavily involved in. So I think the demographics are looking good for the United States relative to other westernized economies. The millennials are just as large, if not a little bit bigger, than the baby boomers. So that's a good thing in the sense that you want a demographic that looks like a pyramid, not an upside down pyramid, which is more like what China looks like. China has horrible demographics because of their one baby policy that they don't have anymore, but they did have. But the demographic change in the United States, I think people should be looking at the freelance economy as a big demographic shift. I think the cannabis space, overwhelmingly, we're going to see that. Voters want it. People will demand it. Nobody sees the stigma is not there with the millennials. It's not even really there with the baby boomers. And then lastly, the biggest demographic change that we're seeing is the use of technology in everything and the loss of physical. From Blockbuster, first we lost Blockbuster Video, but pretty soon there won't even be banks. And Chase Bank actually just launched a specific online bank only, where you can literally open an account and set up the whole thing on your smartphone in 5 minutes. And I think that's the future. And people go, well, what about like with cryptocurrencies? What about the people who don't understand it? Look, there's also extinction. Not everybody has to adopt the internet for the internet to work. Not everybody has to adopt email for emails to become the main use of communication. And I feel that same way about cryptocurrency, that people will use it and it will be something that's very normalized in 10 years, 20 years. But not everybody is going to adopt it. I know 50 and 60-year-olds who to this day don't use email. I know a 60-year-old woman who's a close friend, smart lady. I don't think she's ever used the internet in her life.
Right. Yeah, there can be a real downside. Some of the conversations we've had with various guests, I'm thinking of from Layman's Hardware, where they sell all non-electric supplies, that sort of thing. They're talking about and we've talked to Kevin from Survival Blogs. We have to be cognizant as these changes sweep across our culture, not to lose without thinking it through some of these things. Because I remember visiting our grandkids, and one of the treasures that I have, treasured memories of being with our own children, was bedtime stories, reading books together at bedtime. And I said to my grandkids, okay, it's getting to be bedtime, let's go read some bedtime stories. Like, no, that's okay, Grandpa, I got my Kindle. And it's like, they were just, I was flat out like, I don't need you, Grandpa. I've got a Kindle and it's more entertaining anyway than any stories you were going to make up. So we have to fight sometimes to reclaim the dynamism of our connection to each other and not lose that in the technology. But you're right, the technology is not going away. So the question is, how do we integrate that in a way that we still make it? We decide what priority it's going to take in our life and not just abdicate our life to it. Could you talk to us a little bit about what of the world's challenges can be blamed on the U.S. dollar and what individuals can do about it? We've had all kinds of people like Jerry Robinson and others, Bankruptcy of Our Nation and so on talking for years now about the risks inherent in the fiat currency system, and people want to make sure that they're not positioning themselves to be at risk because of that.
Well, I think everyone on this show knows the fundamental problems of the U.S. dollar and the fiat system and how scary and risky it can be in the future. So just on an individual basis, on preparedness and what people can do, and what I am doing in my own life, and what I suggest to futuremoneytrends.com subscribers, is to really what's the point of hoarding fiat currency? So why not own cash flowing real estate? Why not own gold bars or silver bars or a dividend paying stock? Why not own these assets that bring income into your life, or bring some sort of stability where despite all the risks out there of a fiat currency crisis or even a government crisis, why not just own the things that are certain or more certain than a fiat currency that, as we know, have all faced extinction at some point? in time. So I don't know, when I talk to people, they're like, how much currency should I save? Should I diversify in my currencies? No, I wouldn't diversify into a single other fiat currency. Why own a Canadian dollar or a Hong Kong dollar? If the dollar has a crisis, that's it. All of them are going to have a crisis. And that's probably why the dollar hasn't had a crisis, because everybody's defending their right to have fiat money. Everybody's defending their right to have a central bank. And the central banks are defending their right to have power over the whole world with this printing power. So I bet against the Fed, as I've stated in this conversation. And, one thing that I've learned is that it can take a lot longer than we think. So certainly prepare, but also prepare to prosper. And I think if you're buying assets, real assets, hard assets, especially ones that can cash flow, like some real estate, I think you've done some great diversification, because even in areas like Argentina, where they've experienced severe inflation, hyperinflation,
right.
and they've had resets, and you talk to people in those countries, and the people who held on to some real estate or had some gold, they've done really well. But people who had their money in the bank, they haven't done too well. So I think the lessons are there. But the most recent one was in Zimbabwe, where you had hyperinflation, and you saw their stock market go ballistic. I think the big lesson is to not hold too much fiat currency, because that, the perception is that it's safe and nominally it won't move. But it appears that during crisis, the fiat currency is the riskiest thing that you'll own.
Could we turn our last attention to your assessment of Trump's first year and a half as presidency, and what you think the next 2.5 years holds?
I think, that the definition of insanity is trying the same thing and expecting a different result. Yeah. And that's what would happen if Hillary would have been elected, or Jeb Bush, or any of these other people. Trump changed things, that's for sure. On the positive side, he's brought out the deep state into nakedness, in my opinion, especially the media. I mean, my goodness, I don't want to be a conspiracy theorist, but I have to assume some of these people work for the CIA, maybe even foreign governments as well. I think Trump has done a pretty good job in being able to get the tax cuts, which is people's money, being restored back to the rightful owner. I think he's done a good job in rolling back regulations. I think he's done a good job about bringing world peace. Where he's failed and where he's not done such a great job is getting in control over this debt. Now, I've doubted Trump many times before, so I'm going to give him the benefit of the doubt, at least here for the next year, and see what he's up to. Maybe he's trying to get the economy going to a point where, or at least have a good enough relationship with countries like China and Putin to where he can do some sort of dollar reset or some sort of debt reset. Maybe that's what this is all going towards, where you have a personal relationship with Putin, who again wants stability, and you have some goodwill towards China with stabilizing that region and getting rid of the rockets that are going off in nuclear tests with North Korea. Maybe he's built up some goodwill to where he can restructure the debt, which is what he has probably some pretty good experience with his casinos and some of the other businesses that didn't do well.
Daniel, before we let you go, our time is short, but if you could give us a few more thoughts on what you'd like to leave with our viewers and how they can find out more about your research at Future Money Trends.
Yeah, if you guys check out futuremoneytrends.com, you can subscribe free to my weekly wealth digest. It goes over, my wife and I were made the decision to really focus on being financially independent. It took less than 5 years, a lot of sacrifice. And of course, I approach this all with the same mindset that many of you have, that we are approaching a very sizable crisis in the U.S. and the currency. So I did it, and I did it with keeping that in mind. So I did it in a diversified way that was out of Wall Street, out of the stock market, to where I did it with real assets that could cash flow. And again, check us out at Future Money Trends. I'd love to share all my ideas with you.
We've been speaking with Daniel Ameduri, co-founder of FutureMoneyTrends.com. Thank you, Daniel, for joining us again here on Reluctant Preppers.
Thanks for having me on the show.